one of the most popular common questions among my followers is how to find these very high probability setups, these very trades that the chance to win them is higher than others. How to pick your winners. So the internet is full of videos, promises, some guidance that just promise you to have 90 or 100% success rate trading setups if you just follow some indicator telling you buy or sell. Well, it looks good, it sounds good, it definitely looks promising, and it's tempting to believe in something like that. However, it does not exist. You cannot expect some indicator to give you 90 or some videos I saw recently 100%, but never lose calls like buy or sell, like to work in every market condition, in every market phases and different periods and changing structures. It doesn't work this way. So in this video I want to talk about that and to share with you many examples how do I pick my trades. So as a rule of thumb, there are three elements of trading I implement for every single trade. These are the technical analysis, which I call the preparation for the trade, right? So you might know that already I am an internationally certified financial technician. So technical analysis is what I specialize in, and everything I learned, all the experience over the more than 15 years, I feel like a dinosaur saying that, that's what I put into every single analysis I make. And as a rule of thumb, my leading factors for a decision are always multi-time frame synchronization, cycles. I love to see waves that currently built on the market synchronized in the same direction, and or multi-time frame divergence to be synchronized in the same direction. If I manage to find that together, that's where I start to implement the second element of my trading, and that would be the strategies. That's where I implement strategies. I choose, first of all, I always spend most of my times analyzing the charts, analyzing the opportunities. And if I find something that has higher probability for me, which means multi-time frame synchronization in the same direction, if I find important trading levels and the different time frames are synchronized in the same direction, that's where I know, okay, it's time to start looking for entries. Okay? And by the way, the reason I love the multi-time frame synchronization is because every time frame is a different flow of money. And if all the different flows of money are synchronized in the same direction or are looking to buy or sell specific instrument, that's when I know my probabilities to end up in this direction, a winning trade, are much bigger than any other opportunities. So then it's time for the strategy. There are different strategies, and of course I can't explain everything in one video, but that's exactly what I teach in Home Trader Club, and you're very welcome to join and to learn all my trading techniques. And the third would be the management. So in this video I want to do something different. I don't want to give you a presentation. I don't want to create a PowerPoint or show you a PDF or slides or anything like that. What I want to do in this video is to share with you the real trades, real trading opportunities as they were spot with the analysis and with the chosen trading strategy behind them, with validations and invalidation zone, and was published in real time in Home Trader Club. So what you will see in this video is the original. It will be like sections, right? Different trades. You will see the original video fully explained with the analysis behind, with the trading strategies behind, and of course the final result, if it's the take profit, if it's the stop loss, or if it's a management I had to implement. So I hope after this video you will see how the flow of my trading decision actually work, how I go through analyzing different time frames, choosing key trading levels, multi-time frame waves synchronized in a cycle or divergences synchronized in the same direction, and how I implement my trading strategies. If it's the reversal with convergence, or trendline breakouts, or ABCD breakouts, or hidden divergence to ride a trend, etc., etc. How do I validate my trading zones? How do I choose my invalidation? Where and how do I respect the risk-reward ratio in my trading decisions? I hope everything will be clear for you. If you will have any questions after watching this video or during the video, don't hesitate to ask in the comment section, and I'll be more than happy to answer them. And once again, I invite you to our trading club, the Home Trader Club, where you will, one, enjoy all these real-time trading opportunities as they are found in real time, where you will get access to our real-time trading education and super comprehensive media zone full of content, webinars by myself and guest speakers for you, teaching everything about trading. Ready? So let's begin with trade number 1. Before we continue, I would like to take the opportunity, give big thumbs up, and to say special thanks to 8CAP Broker for supporting me, my community, and my channel, and our work we put here for our traders. To learn more about 8CAP Broker, just follow the link below this video in the description, and you will see why they are considered to be one of the best, one of the absolutely top brokers for Forex traders in the industry. PoundCAD was one of the amazing examples where weekly, daily, 4-hour chart are all synchronized in a clean flow of decisions and trading setup. Watch carefully in this video how did I pick my trade. Hey guys, how are you? Bearish idea on the pound Canadian pair we started to follow a couple of weeks ago, and I shared on a weekly forecast. Now here is what we have on the pound CAD, and here is why I like it. So besides the fact it is holding this massive supply area and the falling resistance line, we have here huge volume profile zone. We also have histogram divergence between the swing highs and moving average divergence between the recent highs. Absolutely classical, promising technical condition. On a daily chart, this is a potential double top here. I said potential because for double top to be valid, this would have to be broken, this neckline. Of course, it's pretty far from there at the moment. Regardless, we do have, again, these are the highs of the weekly, massive divergence, as we can see. And with the RSI being close to its overbought condition from the previous high before it is building up the potential double top, it looks classical. So there are a couple of options here, one more aggressive, one more conservative, which I want to explain. So the first target, the plan here for me is after we flip this trend, right, the daily double top, but the 4-hour chart reached here this area with a bearish divergence, with lower lows on the chart and on the indicators, and then went to create a zigzag, 2 waves up and a range, which is now being broken in live, as you can see, real time. Okay, so this is a zigzag with range breakout setup or strategy based, and the way I deal with such conditions. Aggressive is right now with the breakout. Conservative is when we get a close below the candle, and as long as the most recent high before the breakout, in our case this zone, holds, this is a good bearish opportunity. Okay, so technically speaking, in terms of targets, let's discuss about that. If we plot on the whole cycle of the weekly chart, this thing, right, we have very important levels on the way, and of course the expansion of the 4-hour chart legs, this and this. The first target zone is here, 161.8, and the neckline of the double top. Okay, here. This is also right here around the key volume zone. So this would be a very legit, strong first target zone. Second target zone is actually much lower. If we manage to break it down, then we could anticipate this duplication, and that brings us to here, which is close to the 38 to Fibonacci retrace with this huge demand area from the weekly chart right at that point. Okay, and also close to the 160 psychological level. So on the short-term target, this would be the first zone. If we go beyond that, this would be our final zone for this potential sell trade. Okay, that's it for this video. Pretty straightforward. The bearish divergence synchronization of the weekly daily chart, 4-hour chart, flip of the trend here, making lower lows, and a zigzag setup. And the strategy in that case is the zigzag plus range breaker. For any questions, and therefore in our Telegram group, good trading. Next one would be the CAD Yen. Absolutely amazing synchronization between the different time frames with absolutely classical, powerful technical methods. Watch this video, see how I choose this CAD Yen, why did I choose it the way I did, and how did I trade it, why did I mark the target in a place I did, and how the price touched it right before bouncing from it. Hey guys, how are you? Bearish idea on CAD Yen. But before I continue, I want to remind you that we already are exposed to the yen twice. One with the pound yen, one with the Swiss yen, both active ideas. So very carefully approaching total exposure to the yen pairs, of course. As always, we don't want to find ourselves overexposed to any specific currency. So here is what we have technically speaking, and this is at the moment an aggressive setup. I want to explain why and how that could become a conservative setup. So starting from the higher time frame, let's go all the way to the monthly, not because we are going to trade, just to explain what do we have there. And here is how it looks. Monthly chart potentially developing a bearish divergence on moving average of the MACD, histogram, and the RSI. Also, all that happens, as you can see, on a very, very strong sell zone. Okay, this was the close price, right? Then the low, new high, then the trend flipped. And then take a look on these spikes we have here and this zone, right? Big candle, small candle with a lot of fights between the buyers and the sellers, and then another massive move down. This becomes a key zone. So we are approaching right next to this area, and I believe that on a longer term it could be, or this glitch before the move down, or attempt to pull back, a final rally, something like that, right? And then a big sell. So I don't know the long term yet, and the monthly divergence did not complete its only potential, but it already speaks for itself that the bearish pressure is growing or getting bigger and bigger as we proceed towards the levels. Now on the weekly chart, we are riding the Bollinger Band. On the upper band, As you can see here, we also have the duplication level. Let me just quickly show it. Here we are right on the duplication level. Okay, and on a daily chart, if I go there, on a daily chart, it starts to be also very potential opportunity. As you can see here, triple cycle is coming in play. Okay, 3 waves, bearish divergence developing on the moving averages of the MACD for a potential ending cycle condition. And the zone here, 61 towards 261, a golden ratio. Okay, and this zone is right next to the supply zone we saw from the higher time frame. Okay, so as per the potential setup here, we go to the 4-hour chart, and here we are. False break already in place. Potential reversal here, 2 false breakout, 1, 2 false breakouts under the bearish divergence on the moving average of the MACD, right? So what we want is the price flip for a trigger. So we need this low to be broken. Okay, what we want here is, again, this low to be broken, lower lows on the chart and lower lows on the MACD histogram to trigger a full convergence. Okay, that's what we want to see here. If happens, we got the okay, and the trigger zone will be right here between the broken low towards the previous or the last high before the trend flips. Okay, this is our trigger zone. We expect to see further bearish continuation down. So with that in mind, the target levels that we will be heading, well, the first one would be this undeniable, let's just take it here and you will see that undeniable zone here of the volume. Okay, a lot of money is going through this zone. We are talking about approximately like 107.50. Afterwards, what is this noise? Afterwards, we plot the Fibonacci retracement on the cycle. You can see that the first target zone is actually next to the 23.6. Okay, the reason we pay attention to 23.6 is because the higher time frame did not yet complete a full cycle. Okay, in order to make the full turnaround. Remember, I mentioned that this would be more aggressive because daily divergence also did not complete yet. Right? It's only potential in the creation. That's why we need the trigger. If by the trigger, the daily divergence completes itself and makes this tick up, starts to point to the downside, we have a green light for a conservative setup. The difference between aggressive and conservative is always the risk, how much we risk per position. Okay, and the next target levels after this first zone is going to be all the way down to the 38.2. And this demand area zone of buyers we have here slightly below the 105. So that's the plan for the CAD yen. Very important to say, what do we do in case the trigger does not happen on this zone? Just waiting for the next signs, meaning if we get a new high, a new rally, and ongoing continuing divergence, and our trigger zone will just go higher before we actually go for the sell. So we will follow up, of course, but at the moment, with the 2 false breakout we have and a divergence developing, this is the low of interest. We want the break, and from there, looking for the short-term sells. So that's it for this video. For any questions, as always, I'm there for you in our Telegram group. Good trading. Bye for now. Swiss yen is another of the yen pairs. I'll save the words. You will see everything, all the flow of the decision. What and how did I pick the Swiss yen and why? Pay attention to the risk-reward ratio. Know the target zone, the classical demand area you will see there. I choose for a target, and know how the price touched that right before it bounces all the way back. Take a look carefully. Hey guys, how are you? Bearish idea on the Swiss yen following the explanation from the weekly live session we've had on Monday. Now I am trading here a daily special cycle, and the special cycle I refer to is here. One second. Is here. Okay. The level is 261.8. The divergence is between 0.2 and 3 here. On the moving average of the MACD, as well as the RSI, as well as the histogram. Everything lines up there. Now, for a longer term, that might be not yet fully completed, but at the moment, what we do have on the weekly chart is riding the more than 20 candles on the upper Bollinger Band. Same condition like we've had on the previous leg before the big correction took place. So I do expect to see a pullback here, at least this zone, very possibly deeper to this inner area, before the market will define and design the next movement. So this is the leg I'm trading, okay? So going down to the daily chart and plotting Fibonacci retracement on the whole movement. The way I see that, just put it here, is that the first target, even if we go only on the smallest leg here, okay, the first target zone would be around the previous lows here, down to this area. Okay, we have a bullish control, little consolidation, and a rally. This is a strong demand zone, and it will be a first target zone, which is basically around the 23.6 Fibonacci expansion, okay, or slightly below than 160. The next target zone would be the 38.2 Fibonacci retracement of the whole daily cycle, down to the broken resistance that now behaves as support and demand right here. So basically 155 and lower. Okay, these are the target levels for this cycle. And as per the trigger, we have a zigzag, as I explained on Monday. Please watch if you didn't. The plan here is to trade two waves, breakout, or a range. And the way I see that range it is, that's where we stand at the moment. So what I want to see from this pair is the following. I want the price to go and to close below the triangle and ideally below this low. Okay? This would be a conservative call. Just close below this triangle line would be a bit more aggressive call. Okay, so that's what we want for the sellers. And then any pullback is a good zone or a good sign, sorry, not a good zone, a good sign for anticipated further bearish continuation towards the mentioned zone. Invalidation would be here, above the most recent high before the breakout will happen. So that's pretty much it. That strategy is zigzag plus range breakout. Then what the trigger would be the close below the mentioned levels. The traded cycle in play is the daily cycle with the daily Fibonacci levels as the target. That's it for this video. For any questions, as always, I'm there for you in our Telegram group. I wish you good trading. Bye for now. Pound Yen is another yen pair, and again, I'll save the words. You will see in the video full explanations and what leads me to decide the way I decide, how do I pick it, what technical analysis and elements I pay attention to when I pick my trades, and eventually they ought to be my winners. Take a look carefully. If you have any questions, don't hesitate to ask in the comment section. Hey guys, how are you? Bearish idea on the pound yen. So this is a re-entry after we get out with early cut in the previous attempt. So the return here is to the same cycle, same daily cycle, special cycle, with these three waves right on the 261.8 Fibonacci expansion with 185 round number. Okay, I think it's only daily cycle, because for the longer term, uncertain this is a trend change. We still might experience something like that on the weekly chart. Or if I go to the weekly to present it, then I would not be surprised to see something like that. Okay, until it goes and completes the weekly divergence as well. So it's a daily cycle. Again, it's a more towards the short term rather than the long-term trend change. Okay, this is a daily chart. We have the bearish divergence here and the RSI as well. And going down to the 4-hour chart, let me just show it to you. The last daily leg has this divergence, higher highs on the chart, lower highs on the moving average, and flip of the trend, lower lows on the chart, lower lows on the histogram. And here comes a zigzag setup, 2 waves down, 2 waves up, and the rally here, which had suspicious sign. This is why we stepped back initially, right? But it ended up holding, despite closing above, it turned to be a fake close above this supply area. And the market bounces back and breaks and holds below this ABCD line. Let me just close the window. 1 second, some noise from outside. Sorry about that. Closing below this ABCD line. Okay. So we got this trigger on a zigzag. So for me, as long as this high holds, it will be the invalidation high. The bearish view is relevant. Any pullback here is a good opportunity to start looking for the sell. As per the targets, so the first levels I will be paying attention to is right here. Okay, the volume zone, daily and weekly chart, and the demand area. You can see here a lot of levels of the lows where the buyers took control of, right? As you can see. So all that is a key zone, and this will be the first target area. Well, in a bigger scale, going back to the daily chart to figure out the targets based on this daily cycle, then the next targets are all the way down to 38 and the 50%. 38, I would be also paying attention to this low right here. Okay, this is the second target. The final targets is right here around the 50% Fibonacci retracement of the whole daily cycle. Okay, so again, this will be the first level I will be paying attention to the price. If it just goes below this area without any signs against us, then of course there is nothing to do here. We just carry on to the 32. But we will follow up and see how that goes. And that's it for this trading idea. Let me know if you have any questions. As always, I'm there for you in our Telegram group. Good trading. Bye for now. Euro Aussie was one of these examples I love, with the weekly, daily, classical levels, divergences, everything in place all together. A trade I could not resist. Watch carefully the flow of the decisions on the Euro Aussie. How and why did I pick my trade and my winner? Hey guys, how are you? Bearish idea on the Euro Aussie, an aggressive setup, which means smaller risk. And here is why I am looking at this opportunity. So the big supply area we've had here, okay, all these spikes where the sellers were in control, was broken. And the market managed to simply go beyond this level and hold it. However, there is one more level I pay attention to, and it's right here. Okay, the reason is at that point is simple. We got a big control of the sellers. Buyers were trying to reject for several weeks, as we can see here with the spikes, but failed. And then the sellers took again a big control. So all that becomes a very strong zone of sellers. Okay. Besides that, on a weekly chart, we have a potential cycle to come in play. I say potential because it might take some time until the weekly will actually go and complete its divergence. That's why my view is aggressive and shorter, because the longer term is not yet completed. Going down to the daily chart, that's what I would expect to see on the ideal scenario, something like that. Okay, movement here, some correction, and final movement before the big turnaround. And that's exactly what I'm looking to trade, is this movement with its correction, short term. So the daily has the slow down divergence here on the histogram. And as we can see, RSI supports the view. We do have the bounce of the 1.7, which is a round number. Okay. And going down to the, sorry, one more thing here important on the daily chart. If we take a look on the Bollingers, we can see that this is the duplication area. Okay, this is the Bollinger Bands indicator I love to use for dynamic resistances based on Bollinger Bands. So pretty much everything fits here in a classical area. Now going down to the 4-hour chart, here is what I see here. Okay, after this range that we had and the rally, okay, 3 classical waves, and it all comes eventually to the place where we got the big divergence here and divergence between these highs, higher highs on the chart versus lower highs on the indicator. RSI joins the party as well. And what I like here is the false breakout over this trend line, okay, fake high, and false breakout between these highs, okay, with this divergence, of course. Okay, so I like this condition. It's pretty beautiful. There is one thing that what turns that into aggressive setup, and that's that the 1-hour chart didn't have any classical reversal. Right here, we don't have really any classical reversal in terms of false breakouts or trendline breakout and lower lows, nothing like that. So it's only with the 4-hour chart divergence, daily and weekly, of course, in play. If we go to the lower time frame, we can argue here about a zigzag, set up 2 waves down, 2 waves up with a divergence, right, which was basically broken. So it fits, but the 1-hour chart is missing. That's why for me, it's slightly more aggressive. So it's a sell in the short term versus this high, and it will be valid as long as this high holds for me, aiming on the 4-hour chart Fibonacci retracement. Let me just plot out the lines here. Aiming the 38.2. Choose the color. So 38.2 down to this demand area and the resistance that now becomes a support, as you can see, right? This would be the target zone for this sell. Okay, we also have a big volume zone here. So starting from the 38.2 and the demand area, which is also broken resistance now as support, down to the 50, which is around this demand area. This would be the potential final target. From there, as I explained before, ideal scenario would be to get a final rally based on the daily before the big turnaround. So that's pretty much it. Okay, short term, aggressive, smaller risk. That's it. For any questions, as always, I'm there for you in our Telegram group. Good trading. Bye for now. Dollar CAD, actually you will see in this video 2 dollar CADs. Here is the first one. Once again, multi-time frame synchronization. You heard me many times saying that. Once again, I'll repeat. Classical level, divergences, and trading setup. risk reward ratio in my favor, I have a valid trade. Watch out. Hey guys, how are you? Bearish idea, dollar CAD. So let's see what and why. On a daily chart, we are right on a strong supply area we have here, and the price is holding it. We can start to see some slowdown as the Bollinger Bands were duplicated here. And the MACD starts to lose some momentum while the RSI is very close to its overbought conditions. But what got my eye here, of course, besides the daily interesting situation we have, is this 4-hour chart movement in 3 waves towards the 61 Fibonacci expansion of the second leg and the 361 right here. Okay. So it's really interesting zone, a pretty rare zone, but in golden ratios of 61 with 61 expansion. This in that case, of course, it's 361. But also, of course, the divergence, kind of undeniable one, very long divergence here, and on the most recent highs, and it's everywhere. The RSI, the MACD moving average, the histogram, everything flips there, everything fits there, histogram on the last 2 highs. So it looks good on this triple cycle, the rounding top here, that right on the supply, the rejected area, it looks technically well, and as long as it holds, there is a great chance of corrective movement. Going down to the 1-hour chart, you can see sort of a double top form here. Okay. For a double top and for more conservative setup, we need to break this low and get lower lows on the chart, lower lows on the indicator to get it really into the conservative setup. But on the aggressive scale, we do have some sort of a zigzag. After the 4-hour chart divergence, 1-hour chart makes a zigzag. 2 waves down, 2 waves up. And this line is broken. So for me, of course, we want to see the price holding below this line, right? And that could be a good trigger, and then any pullback here should be a good aggressive sell opportunity until the conservative will trigger. For this setup of the zigzag, the target zone is going to be the 38.2 down to 50% Fibonacci of the 4-hour chart cycle. In our case, right, this zone. Another reason why I love this zone, it's also because it's right here on the broken resistance, which is now acting as a support. Okay, but also if you go to the daily chart, you will see that this is a retest of this falling resistance line. It's all there. So it's absolutely classical zone for the target area. Okay, so we want this close below the line, any pullback, and we should get this corrective movement. For me, as long as these highs hold, this is the area of invalidation, I will be bearish. So that's it for this video. For any questions, as always, I'm there for you in the Telegram group. I wish you good trading. Bye for now. And here is the second dollar CAD. Again, absolutely beautiful synchronization that leads me to the series of decisions I make here with the same guidance in front of me, the same big idea how to pick my trades, levels, multi-time frame synchronization, divergences, risk reward ratio in my favor. I have a trade. Take a look in this video. How and why did I pick the dollar CAD? Hey guys, how are you? Bearish idea on dollar CAD. So since we moved earlier today on risk-free on the pound CAD sell, it eliminates the risk of the CAD instruments involved. So dollar CAD starts to be interesting. So even though on the long term, I still believe we should see dollar CAD making a final high based on the weekly cycle, as I explained on the Monday live session we've had. On a shorter term, I believe we are due to correction. So first of all, retesting, as you can see here, falling resistance line of this channel or range. We're right on the top. we have a beautiful supply area at this zone. Here we can see a lot of sellers, right? Accumulation, because they were building up the positions, right? And then accumulation happens and boom, the sellers take control of this instrument. Again, strong supply area with a trend line, and besides that, the technical signs of the cycle. We have here 3 waves. Bearish divergence comes to the end. Moving averages, histogram, and RSI joins the party. On the Bollinger Band, it's noise, sorry. On the Bollinger Band, we are more than 20 candles right. We got the bounce to the middle Bollinger Band, never to the end yet, to the opposite band, which is here. That's also a golden place between the 2 moving average, 50 and the 200. We can see 2 spikes in a row, attempt to rally, which contradicts immediately with what could end up as a partial engulfing here. Lower highs, lower lows on the candles in creation. All that good technical signs. And from the 4-hour chart, we can see also more than 20 candles right on the Bollinger Band, which reached its lower band at the moment. But the good part here is every of the legs, the first leg, the second leg, and then the third leg, come to the end with the, sorry, why did I mark it this way? Right here. Okay, we are right on the golden rush. Let me just show it to you. Right here. It's low. 361 at expansion of the first leg, which we got here 2 waves up and then a range as a breakout for a zigzag. Then we got the rally to here and with the bearish divergence. And the recent leg also comes to the end with this divergence. Let me just again enlarge it a little bit so you can see that clearly. Okay, divergence pretty much everywhere. So the verification also goes well on the 4-hour chart, and on the 1-hour chart there is a technical condition which I like, and that is right here. That is the fake convergence. What do I mean by that? So we've had here, let me just show it to you. We've had here bearish divergence, then it never flipped the trend, but made higher highs on the chart, higher highs on the moving average. But between 0.1 and 3, we do have a bearish divergence, higher highs on the chart, lower highs on the indicator. So between 0.2 and 3, this is like a fake attempt for a rally. Then the low of this zone is broken, and we can, sorry, not here, because this is where the fake convergence is. This is the low in between. And we can see the market starts to make lower lows. So any pullback to this zone should be good opportunity for a shorter sell. This becomes as a classical this area up to this area, become a classical trigger zone. Any hold inside this area should be a good opportunity for the bears to push it further down. As per the target, so the invalidation, of course, is the most recent high for this view. And as per the targets, we need to plot Fibonacci on the whole move. The targets will be the 38.2. You can see here resistance and support demand area next to the 38.2. This would be our target zone, even though we will need to pay attention to potentially slightly higher with this volume zone, right? So that we could see some troubles of the market making something like that, right? In between 23 to 80 somewhere. So if that happens to be this way, it's important to pay attention, of course, and then do earlier management. So that's pretty much it for this bearish idea. For any questions, as always, I'm there for you in our Telegram group. And I wish you good trading and good weekend. Bye for now. DAX was one of these rare technical setups. I will say my words. Take a look carefully how all the higher time frames going down to the lower time frames leads to the same decision. Go for a sell with a very specific invalidation in mind. Take a look and don't hesitate to ask any question in the comment section. Hey guys, how are you? Bearish idea on DAX. This would be classified as more aggressive one, meaning smaller risk, and I would like to explain why. I explained the whole bearish idea in the last weekly live session we've had. It was last Monday. This week we didn't have one as I was traveling. Please watch it if you didn't, or rewatch it if you forgot. So what do we have here? Starting from the monthly time frame, we have a bearish divergence on the moving averages forming histogram and RSI. And going to the weekly chart, basically we have a multi-time frame bearish synchronization based on the divergences. Going to the weekly chart, we had the same, the weekly bearish divergence on the moving averages, then one more here. The only thing we don't yet have is the trend flip, right? We don't have lower lows completed yet. This is why this will be classified as more aggressive one, which means smaller risk than usual. So this was the weekly, and then on a daily chart at the end of the three waves here, we also got just bearish divergence, which flipped to be convergence. One more fake high to create here. Take a look on these conditions. Fake convergence idea, higher highs, basically on the indicator, but between first spot and the last spot, we still have the bearish divergence conditions. Again, as I mentioned before, the only thing we don't yet have is the break of this important low, yet to happen. Okay? And still, the condition I love here is that this most recent channel, or you name the pattern as you would like, was broken. Just redraw it a bit more accurate. Was broken down, retested, and so far respected and holding here. And as long as that is the case, that's where I think that the DAX is preparing the ground for potential further bearish continuation. Okay, so again, multi-time frame in terms of bearish divergences, and as per the setup, if we go to the lower time frame, there was a clean condition. You can see it also on a daily chart, but I'll just show it to you in a cleaner way. Zigzag, so two waves down on the weekly chart, two waves up on the 4-hour chart as well, right? The broken line come for a retest, and so far this zone, okay, take a look on this area, massive volume based area, okay, both daily and 4-hour. You can also see the setup on the on a daily chart, as I mentioned. Look here, I'll just show it to you. 4-hour a bit cleaner, but also on the daily chart you can see that. Okay, here, two down, two up. We get a break, right? Retest, holding, and again, look at this volume in this pink cloud. Okay, this is the KTLI indicator we haven't used. So again, these are all the bearish reasons and the conditions that DAX has at the moment. So the way I see that, it is a bearish opportunity. Yes, more aggressive, but bearish opportunity as long as the most recent high holds. This is the invalidation zone. Okay, as per the targets, very important thing. So plotting Fibonacci expansion on the two leg of the current correction, and plotting it also on the last full leg here of the weekly cycle. And what we see here is that the 38.2 falls pretty much around the 100, as you can see, right? And on the demand area and the broken resistance that is now a support. So this, for me, is the first target zone. Okay. Second, and I say first because if we really start the bearish long-term cycle based on the weekly divergence, monthly divergence to the downside by breaking this low, right? We will then potentially go and create two waves down, two waves up, and something very deeper for a long term. So this will be the first target zone we just covered here. But that's a great potential that we will see eventually the previous major weekly and monthly low would be retested, maybe even more than that. So this is aggressive, starts as a shorter with the 4-hour or daily zigzag setup, but that's something that could turn to be a very, very long term. We'll see how that goes, of course, and do the follow-ups once relevant, but very important to explain from the beginning what are we talking about. Okay, so our first target zone is this zone, and this is where we are looking to head. That's it for this video. For any questions, let me know. I'm there for you in our Telegram group. One thing though, guys, not everyone can deal with indices due to risk management and the account balances and sizes and different reasons. So please estimate yours properly and correctly, and do not trade things you cannot afford, fully understand, or can allow yourself to be involved with. Very important. This is mistake traders, especially in the beginning of the journey, do. Please be smarter, okay, and don't put yourself in the conditions or situations you would not know how to exit from. Very, very important. For any questions, I'm there for you in our Telegram group. Good trading. Bye for now. So that's pretty much it for this video, and I really hope you find value and you understand the flow of my trading decisions. When and how do I spot my trading opportunities with a multi-time frame analysis? If you find value in this video, please make sure you hit this like button. A few words in the comment section would make a great help to me, my team, and the work we put in this channel. Feel free to share this video with anyone who you believe can benefit watching it and learning from my explanation. How do I pick my trades in order to increase my winners with high risk reward ratio? Thank you for your time watching this video. I'm Vladimir from Home Trader Club, and I invite you once again to our trading family, the Home Trader Club. Join us with the link below this video in the description. Best to you and yours, and I'll see you soon with more. Bye for now.